Hello everyone, thanks for watching my Finance Lingo channel. In this video, I'll be teaching on optimal investment point. This presentation is provided to you for general information only and does not constitute a recommendation and offer a solicitation to subscribe or purchase or sell the investment product mentioned herein. What is the investment point for ordinary investors for cash trades in this question 1? So to explain that, we need to start off with the definition. Ordinary retail investors, here we are referring to individuals with net worth of less than 300,000 and CPF OE inclusive. To obtain optimal investment point, I use the Excel sheet to draw out the cost of investments with different amount of capital and costs. For cash trades, this was the spreadsheets. On the column highlighted in blue is the cost of investments. When an investor bought some shares, normally the brokerage fees come to around 25 Sing dollars. The investor must remember that at some point in time in the future, he will need to sell the shares when there's a good profit to take. Well, investors, please remember to sell the shares to take some profits because sometimes stock market can be irrational. So, okay, we then sum up the present buy cost and the future sell cost and identify the total cost of investments. In these calculations, right, we actually assume that the holding horizons for all these investment is 1 year or less. So as for those who want to hold shares of more than 1 year, let's say 2, you can look at the initial investment of each stock at as low as 2005 because the brokerage cost is incurred only one time and not incurred every year. Okay, so over here we then divide the total cost by the cost of investments, which work out to a percentage highlighted on this green color column. Once we identify all the percentage points, we then plot all these percentage points on the graph, and we then arrive at this blue color line on the graph. At the graph, you notice that it tend to very steep downwards where at this 1,000 to 3,000 region. Thereafter, the curve tend to get straighter, and at about 9,000 point, the curve is literally flat. Personally, I invest around the region of 3,000 to as high as about 9,000 because the cost of investment is only at the about 1% hurdle region. So there's no hard and fast rule to determine how much one should invest. But generally, I take 1 year as a basis to take profits should any opportunity arise. Because I do not want a situation whereby I notice the stock began to trend downwards and I remained concerned earning back the cost of investments. Question 2. What is the optimal investment point for beginner retail investors for cash trades with little capital? For investors with limited capital, you should consider investing in mutual funds or unit trusts. As for those who want to venture in stock, do take advantage of the $10 commission or brokerage fees. So what I have here is I provided the URL for you to read up on how to take advantage of these $10 commissions. So you can read out over here. So generally, I'll just sum it up. Okay, for the $10 brokerage fees, you need to trade less than 1,000 shares on the same counter, and the contract value must be less than 3,005. So over here, I presented a table for you. So similarly, I work out the present buy and the future sell cost. We sum it up and divide it by the cost of investment. From then on, we identified the green color column as a percentage as a form of cost of investment. Once we got the numbers, similarly we plot it against a graph and we come to this red color line shown on this graph. And similarly, we notice that the line tend to get flattened at around the region of about 3004. So okay, Now we go to this next questions. What is the general equation for optimal investment point? So this is very simple. So what I did here, okay. So what we need to do is just we take the minimum brokerage fee and divide it by the brokerage rates, or in this instance, in most instances, 0.28%. So we work out that the optimal investment point is around 8,925. So that is to say that at about 8,900 region at this point, this curve is less flat going forward. So as for $10 promotion rate, similarly, you just use $10 divided by 0.28%, which works out to 3,571. But of course, this you cannot tap on the promotion rates over here. So generally, you can just trade around the region of 3,000 to 3,005. Because at that region, the cost of the investments works out to be less than 1%. Do remember there's no such thing as minimum investment, but each investment amount must make sense to be feasible and practical in the market. I cannot say that it's impossible to make 100% return in a year on the stock market, as I had did before, but the chances is little. The $10 rates is a great place for traders wannabe to begin with their life practice on trading with a small capital. Reminder, the promotions is more practical for shares trading above $2, which often are blue chip shares, which are often economic pillars of a country. We've come to question 4. What is the concept of optimal investment point? Well, I'll need to draw you guys to the presentation on driving a car. Okay, so this is the concept I'm trying to illustrate. So consider you have two scenarios, okay, and that you need to travel to a destination of which is 180 kilometers away. You can either drive at a speed of 90 kilometers an hour, which will take you 2 hours, or you can drive at a speed of 135 kilometers per hour, which will take you 1 hour and 30 minutes. In scenario A, this vehicle consumes 20 liters of petrol, and in scenario B, it consumes 30 liters of petrol. With that, we work out that in scenario A, the vehicle is traveling at a fuel efficiency of 9 kilometers per liter of petrol, and in scenario B, you work out is traveling at the efficiency of 6 kilometers per liter of petrol. So it's in both cases, both reach its destinations. So however, in scenario A, what we can identify here is that the vehicle is traveling at fuel efficiency and is traveling at a reasonable time, and the risk of accidents is normalized. And in scenario B, the vehicles reach its destination as well, and it took less period of time to reach its destinations, which is a plus point. However, it's not really running at fuel efficiency, and the risk of accidents is higher because it's traveling faster, sorry. Now, we introduce scenario C, driving at 180 kilometers per hour, and compare it with scenario A. Scenario C will probably takes 1 hour to reach the same destination. The fuel consumption work out to 40 liters, and this work out to 4.5 kilometers traveled per liter of fuel. In scenario C, it took the shortest duration to reach the destination, which is a plus point. However, it's running at fuel inefficiency point, and the risk of accident is very high. In scenario A, should vehicle A had met accidents, well, the drivers he could probably take the journey again in the future. But in scenario C, at the speed that he's traveling, if he would have met it with an accident, the driver probably will never get to travel to the journey again, to the destination again. So how does this driving scenarios relate to investments? So in this scenario, the risk of investment is actually normalized when you invest at the optimal point. So what we are saying to say here is that you don't travel too fast and you don't travel too slow. Okay. Investment, there is always a cost. So you want to maximize the returns for each trade on the cost of investments. In relations, you want to maximize each liter of fuel with the distance traveled. On point 3, accidents do occur while driving, and we want to ensure that all drivers can drive again in the future after the accident. Similarly, wrong investment decision will occur, and we want to ensure that after the wrong decision, we have a chance to correct the decision in the future. So for further readings, investor can read up diversification in relation to CAPM, capital asset pricing model of this corporate finance. Right. So now we go to question 5. What is the optimal investment point for ordinary retail investor for CPF or SRS trades? So what I have here similarly, I've worked the Excel sheets. As usual, the investment capital is presented on the column highlighted in blue, the present buy and the future sell brokerage fee. We then sum up the brokerage cost incurred at the securities house and present it in one purple column. Thereafter, we identified the CPFIS banking fees. So over here I make an estimate at the maximum fees that they occur over there and present it in another column highlighted in purple, and I take the maximum fees applicable here. So after that, I sum up both fees and present in the yellow color column as the total fees. Then I divide the total fees divided with the cost of investment to come up with this green color column as a percentage of the cost of investment. So with this information, similarly, I'll plot it against a graph. So this is the graph of CPF trades or SRS trades. So from here, we notice that the gradients gets gentle only at the regions of about 5,000 region or 2% hurdle rate. So and the curve start to flatten at about 10,000 regions at the 1% hurdle rate. So personally, I invest around the region of 5,000 to 8,000 on my CPF OA on stocks. So always looking forward to take profit around the 7 to 10,000 profit regions. So this is the CPF returns. Do notice that the CPF trades, the hurdle rate is higher at about 1%, whereas the normal cash trades, as I shown you here, is tend to be around the 1% region. So you do not want to trade for an amount which is too little. Let's say 3,000, the hurdle rates will come out to be 4%. You've come to the end of this video. If you haven't have a trading account to invest in Singapore or US listed company, do drop me an email at rolandpvk@invest.com.sg. If you like my channel, remember to click subscribe for more investment tips and tricks, and don't forget to check out our related videos. Hope you enjoy watching Finance Lingo, and I hope to see you soon. Goodbye. Oh, you noticed that there was something unexplained. Okay, so now let's get to this trick. This $10 tricks. Oh, didn't realize you continue the videos. Okay, I'm going to teach you on this $10 trick on the quick one. Consider investor want to buy 1,800 shares on this StarHub shares. So it work out to the cost of $6,120 and the brokerage fee of $35. This adds up to $6,145. So how do I play tricks with this? So what an investor can do is that he break this contract up into 2 days. So at 900 and 900 shares on 2 separate days. Thereafter he trades and the brokerage fees cost only $10 on each day. So collectively you have buy 1,800 shares and incur $10 fees. So we sum all these two trades together, the investor only cost $6,140 as compared to $6,145. So over here you save up $5. So I hope you notice these tricks. So don't tell anyone about this. Okay, so really that's the end of it. So I hope you enjoy my videos. Don't forget to like and subscribe my channel. See you soon. Goodbye.